Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glenn Sutherland.
Welcome to another episode of A Canadian Investing in the U.S. This week, my return guest is Alain Forget. Alain, let's give everybody a little bit of an intro of who you are, and then we'll get into our topic.
Sure. Hi, everyone. And thank you, Glenn, for having me again at your Canadian Investing in the U.S. Podcast. It's a pleasure always. I'm Alain Forget. I'm a National Director of Business Development for the U.S. for RBC Bank. RBC Bank being a U.S. bank and a cross-border, a national residential lender for Canadians, and we're obviously part of RBC. I've been with RBC for over 40 years now, and half of my career south of the border, based actually in South Florida.
Awesome. So if you haven't listened to it, we had a podcast. I didn't actually write the number down. Maybe I'll find that out. But I'll put it in the show notes anyway. But we did an interview before, and for using the Canadian banking system or Royal Bank, it is excellent. There's a ton of information to figure out how to be able to do this right as a Canadian. But we wanted to tackle some more topics around it, and so let's just jump into it a little bit. I know that one of the topics you'd mentioned that you'd be interested in talking about was unlocking your U.S. home equity. And I think that's a very big interest, because I know for people who are doing this in Canada, they've put home equity lines of credit on their properties, and I think that most people didn't even know that was even a thing that you could do in the United States.
Yeah, that's a fair assessment, Glenn, and this is why I appreciate to be with you today. Because, if you look at it, let's step back maybe for the last 10 years. You remember that in 2011, 2013, Canadian dollar was at par with the US dollar for a few years. And a lot of Canadians took advantage, of course, of a low, affordable and low price market in the US, bought properties. Those properties increased in value since. And back then, because of the dollar was at par with the US dollar, they may have simply pay cash. And just in the last 2 years, Glenn, of course, like in Canada, some markets like GTA, I think Montreal and even Vancouver went up to 48% in the last 2 years in value. So in a number of those markets where Canadians are buying the most, in Sunbelt states usually, the increased value is in the range of 25 to 40, 45%, and just in the last 2 years. So a lot of equity has been obviously built through that. And a lot of those Canadians don't realize that they have an asset that has increased in value, and they don't even think, like you said, about taking advantage of some soft leverage strategy opportunity across the border, and also just take into consideration the lower Canadian dollar currently, or the strength of the US dollar. So if you look at what currently around 73 cents or 37 percent, more or less, exactly, change every day. But if you look at this, if a Canadian would like to pull out some equity or take equity out, yes, they can, and it's a good time. Even if the interest rates are higher now than they were 6, 7, 8, 9 months ago, they're still historically in the normal bracket. Of course, we entertain low interest rates in the last few years. We know why, and we know the circumstances of that. However, when you think about that, 6.25% are not so bad rate if you look at the last 20, 25 years. So it's still, considering the exchange, a good strategy to think about that. Two options to do it quickly. They can, go with a mortgage cash out, and then up to, if it's a second home with RBC Bank as a national residential lender for Canadians, we can, qualify them from their Canadian credit history, assets, income, and debt. So they can pull out up to 80% of the value, appraisal value of their home in the US, take this money, green dollars, US dollar, to bring back to Canada. And then the exchange will be about 35%. So they can keep a part of that in the US dollar. They can bring some money back in Canada with that 35%. And of course, a mortgage will generate monthly payment, US dollar, of course, principal and interest. And the other option quickly is HELOC. They can do like they do in Canada. Just by way of HELOC up to, they can fluctuate that home equity line of credit and get the same thing up to 80% of the appraised value. and use what they need, what they want to get back in Canada, bring back money, and then to reinvest in the real estate market and the stock market, whatever. I mean, with their advisor, financial advisor, or real estate professional. So they hire right now currently a couple great options to do soft leverage across the border for Canadians, especially they own cash-free or debt-free. And from the NAR report that they are releasing since 2010, so 12 years, they said that based on that, usually it's based on those 12 years, usually Canadians, what they buy is about 70% are paying cash and 30% are getting financing. So it's about $75 billion of US real estate assets owned by Canadians currently, which is debt-free.
Okay, there's a lot of questions I just came up with just from that. But
Sure.
Qualifying for these, I know it's going to be fairly similar to qualifying for a home equity line of credit if you're going to do it in Canada. If you're somebody like me who doesn't have a 9-to-5 job, is this an option? Is this something that I could even do?
Yes, we at RBC Bank, we only work with Canadians in the US, being part, of course, of the RBC family. So we understand Canadians. You can be self-employed. You can be, of course, like a professional that, not necessarily, but an income stream like from 9-to-5 job. So we look at that. We have to look at the last 2 years of income. And we need to qualify based on the income, like I said, and credit history from Canada, obviously, a debt and of course, assets. But the thing is important to understand is there are some rules there, Glenn, as you can understand. We have a rule, for instance, on the underwriting that you may not own more than 4 mortgaged properties, Canada, USA, to ask for, purchase mortgage or refi mortgage. So there are some ground rules, but basically the rest of the underwriting or lending guidelines are similar to Canada in terms of debt to income ratio or debt to, DTS or DTI. And it's really qualified on those. And of course, good credit score, look at it, self-employed. We have the expertise and the experience with our team of mortgage professionals to look at those type of profile of investors too.
Just curious, because you brought up the debt to income ratio. If your ratio was high or not where you wanted to, would it just lower the leverage, or it'd be just a decline? When I started investing in the US, I did it by myself and had to go through the growing pains of doing that. GlennSutherland.com/coaching. A 12-week coaching program done 1 hour per week over Zoom from the comfort of your own home. Classes are kept to 5 people to be able to answer everyone's questions. Shortcut the process. Make fewer mistakes. Curriculum available at GlennSutherland.com/coaching.
Depends. Good question. Depends how higher than the guideline is. So in some cases, you're right, could be to lower the amount that the borrower is looking for, or other cases it might be unfortunately decline because it's way too off. And then of course, too many mortgage asset or leveraged asset in Canada and the US. But that basically the 40%-ish, of course, DTS, DTI is what we look for. And again, it's really each case, obviously, but we look at all the income and of course, even if it's a property that they rent a part of the year, just short-term rental. Fortunately, when it's short-term rental like that, we cannot look at the income generated by that rental because it's not a consistent, of course, rental stream of cash flow. So that's
So it has to be a long-term rental, like 24 or 12 months per year, right? To be able
if from the Canadian side, if they own assets exactly that are rented with a lease and then the 12-month, it has to be shown. But we're doing the net of all the expenses related to the property and all that. So that may generate a little bit more income, but we are kind of conservative on that approach.
Is there certain states that you will not lend to, or is it nationwide?
We are a national residential lender just for Canadians in the 50 states. I will say, yeah, we can lend in all the states in America. However, there are states, and I will mention one or two exceptions, actually one exception, for a refi or cash out, only Texas. Texas is a different beast, it's a different state. They don't allow refinancing for a property there. You
Really?
can buy you can buy a property in Texas. Of course, a lot of Canadians are buying in Texas. It's one of, I think it's ranking fifth or sixth state where they buy the most. But it's just that regulation statewide that they don't have, not even for domestic Americans. So it's a different, it's the exception. The other states, I mean, buy or refinancing options are available.
Okay. And then like, is there a minimum value of what the property has to appraise for? Like, you're not going to do a loan on a really cheap property, I assume, or is there any threshold of the minimum that it has to appraise for?
Yeah, sure. Minimum, I will say, from a cost, benefit standpoint, or for both, for the borrower as well as for the bank, because it's a different process. As you know, it takes more time. It's more cumbersome than what Canadians are used to on the Canadian domestic side of it. So it's usually $100,000 more or less, to consider that, because they're closing costs, because they are, a spinoff of different third party taxes and fees. That usually that's the threshold, more or less. So we can look at also up to $2 million for a purchase or refinancing of a property, but again, always subject for primary or second home up to 80% of the appraised value of the property.
Okay. You mentioned fees there. How does that fee structure kind of work? Is it more like the American lending system with the points in the origination, or is it more like the Canadian lending system? Because I know you guys are in the States, but you're kind of a Canadian bank, so it's kind of a little bit of both.
Yeah, you're right, and of course your experience with that too, Glenn. No, really, yes, we are, of course, a U.S. lender, U.S. bank, and we have to comply with the local regulators. But as being part of RBC, we tend to also structure our products and experience based on the Canadian. Here's two quick differences. Okay. In the US, if you are a domestic resident like myself, it will take the same time. It takes usually 40 to 45 days turnaround time from application to closing. It's not because they are Canadian, it takes more time. It is the process here.
Yeah.
So that's one difference. Then the other difference, obviously, is the fact that if you look at the process of doing all to build the file and all that, of course, it's throughout steps. So the Canadians need to understand that, yes, it's a different process, it's a different experience. However, our mortgage advisors are working through each step of the process with the Canadians because they are not familiar with that. So this is important for us to provide this guidance and advice from the get-go throughout the process. And one thing that is important to remember, another difference, is all of our mortgages are fully opened mortgage. So there is no prepayment penalty at all to repay a part, a lump sum, or a full amount of the balance of the mortgage. So, and then from the fee side, it's very important to understand also that this process include what we call closing costs, and it's a state by state based, because, for example, in Ontario, you have land tax, you have, of course, title insurance and all that. Same thing in the US. However, it's state of Florida that has this 10 tax thing. So there's a lot of third-party fees, taxes that are applying. However, they all bulk at the closing. So you don't have to pay, a lawyer or an attorney or a title and company. It's all bulk at the closing table. So all the third parties are paid directly from, of course, the closing agent. And that's important to remember, because when we talk about, around 3% of the amount of borrowed as a closing cost, it is important to understand that this is not just for the lender. It's all those fees and taxes that are there. And it's, of course, the appraisal and other fees for the lender. However, most of that is, or Quebec, they have like the bienvenue or the welcome tax or things like that. So it is the same here. So as an example, quickly, Florida is about 3%, more or less.
Okay.
Arizona will be more in the 2%. And a state like California will be in the 4% range because of those third-party taxes and fees.
Gotcha. If you wanted to do these, set up a home equity line of credit, or you wanted to set up or do a cash out refi, what kind of seasoning period is required? I'm guessing you can't do this the day after you closed.
Not really. Actually, when it's closed, when we close, and again, the process takes, like I said, 40, 45 days. When we close, and actually one thing, Glenn, too, is you don't have to travel in the US to close on a home equity line of credit or a mortgage cash out. So that's a good thing. With RBC Bank, we work with Canadians. We can do mail away closing. You just have to, of course, have a witness, a legal witness with you for that. So electronically, we work all that from East Coast to West Coast of Canada. Our team of mortgage professionals is based in Raleigh, North Carolina, where we have our US home office. So we can work remotely. And as for the, when the closing is done, the title agent and everyone is of course paid, and the closing, and usually, in the following days, you have access to your funds, and it's a very different process, yes. However, the beauty of a home equity line too, Glenn, is you use what you want, and you only pay interest monthly. Yeah. So here's the thing to remember for your listeners. A home equity line will need to be repaid interest monthly only if you have a balance used, of course, for 10 years. So you see, you can use the home equity line just to do some leverage, or you need some money in Canada, suddenly you want to pull out the equity, or you have to redo the roof of your US property, and you don't want to pay $35,000 US right now, which will become obviously 38, almost $40,000 or $40,000 Canadian. You know what I mean? So they have to think about any improvement, anything they want to do to their US property. Why not using your own US equity you built on that property you own? However, if they want a mortgage, if they have already a mortgage with RBC Bank that many years ago they had when they purchased the property, of course, the equity, the value went up. So they can still have a home equity line up to, from the balance of that up to the value of the property, up to 80%. If it's with RBC Bank. Unfortunately, if it's a mortgage with another lender, we cannot have a second lien on for a mortgage for a line of credit. So you see, there are many options, and I think the most important is for Canadians to remember that yes, they can pull out some equity out from their property in the US.
Awesome. And you said something there about 10 years, like the loan has to be repaid in 10 years.
Actually, only interest payment monthly for the first 10 years.
Okay.
And then the second 20 years is schedule of repayment, principal, and interest. So it's yeah, that's
start amortizing it after 10. Okay.
Exactly. I missed to mention that all our loans, also mortgage or the home equity, is based on 30-year amortization. Okay, and we don't have, of course, the stress test like you guys have in Canada, or that. It's based on our regulatory, of course, and lending guidelines, but it's all 30-year amortization, and term for a mortgage refi or a mortgage for a purchase are 3, 5, 7, or 10 years. And currently, even we had, of course, consecutive increase hikes of those interest rates in the last 6 months. They're ranging between, currently, as of today, it's around 6 to 6.5%. Like a 3-year will be around 6, and of course, a 10-year will be more around 6.5. So those rates are historically not so bad, higher than the last few years, but you see that's
everything is.
And the prime rate is 6.25. So on a home equity line, like we said before, only interest payment monthly for what they use at 6.25.
I like it. I don't know if this is a question for you or if I need to go talk to a broker, but if I was going to go personally for someone like me to go and apply for this, like I have no job, is it just based off of qualifying for this? Would it be just based off of my tax returns in Canada or the US, or would it be like if I was trying to make this easier to get the thing, would it be if I showed income every month or like almost like a salary, would that work better? Or is there a way to make this easier?
Oh, wow, that's a tricky question. Unfortunately, yeah, here's the thing. RBC Bank, we only work with Canadians. So this is really for us, the fact that we better understand Canadians, because remember, our rates are the same here. There's no premium on the rate we offer to Canadians because they are Canadians. You know what I mean? We are dedicated just for Canadians, while other lenders in the US will say, you know what, Glenn, we can look at your file. Yeah, you are a little bit outside the box on a few things like that. Yeah, no income proof or this or that, but the rate will be, instead of 6, will be 8 and 8.5. So and a lot of lenders in the US won't even work with foreign nationals or non-US resident or citizens, as you know. So it's very tricky. But for us at RBC Bank, we're pretty much more traditional lender, conservative lender. So we have to look at the last 2 years of income and all that, regulatory requirements that we have from a lending and regulator standpoint.
Makes a lot of sense. Yeah, I like it. I think I'm even myself, I think it's something that I should be looking into. For Canadians that are listening to this is going to be the cheapest money and the highest leverage you're going to get. Going to the US banks, you're not going to get that. It's going to, you might be able to get more than 4 properties, but you are not going to get better rates or terms than working with the Canadian banks. That's a fact. So, yeah, Alan, is there anything else I should have asked you? Anything else you're thinking you wanted to touch on?
You know what, Glenn, I think with the context of rate increase and hikes that we have experienced, Canada, USA, in the last 4, 5, 6 months, we can expect other increase. But I think if the Canadian is looking to buy a dream home, first of all, affordability is there. 80% of the 5.5 billion purchased by Canadians last year in the US have been in the top 3 states, Sunbelt states of Florida, Arizona, California. California, of course, more pricey, as you know, and all that. Arizona and Florida are still affordable. Average purchase price currently is around $400,000 in Florida and about $448,000 for Arizona. Compare with, average home price in GTA or, of course, Vancouver or Montreal, Ottawa. It's still affordable. Yes, the market went up in the last 2 years like it did in Canada. But you know what? It's still affordable. There is obviously lifestyle, weather, diversification purposes, of course, of asset of real estate, and obviously the ROI possible. Because for us, a second home, somebody can just spend 2-3 months there, go back and forth. And the pandemic showed us that we can work from anywhere. So they can enjoy Florida, go back home in Toronto, go back and back. And when they're not using the property, can rent it out for a few months, and all that with GHOAs and of course regulations and all that. But they can still rent, generate US income. So there's opportunities there for Canadians who are to have a second home, but at the same time, don't spend 6 months here in the US. So all of that is still good. And interest rate, yeah. And if, like in 2 years from now, we go back to the 4%, 4.5%, and then they take a mortgage at 6.25%, they can repay that mortgage, again, without prepayment penalty. So all those things and what you do to educate the Canadians about those opportunities is so valuable, because they don't know what they don't know. And in the US, it's a different country. So rules, regs, laws, practices, terminology, different. So I'm Canadian. I've been with RBC, like I said, 40 years, but I've been here for 22 years. And I have my real estate license too, because I work closely with the market and the professionals. So for me, it helps me to understand, the Canadian side, the US side, and try to guide and advise people.
Okay. If someone's interested in this, where do they go? Is there a certain link off of the RBC site, or how do they go about this?
Yeah, I will recommend, Glenn, because we actually, over the years, we realized that it's not just to provide a mortgage or cross-border banking solution. It's also everything else around: legal, tax, estate, homeowner insurance, and all those things that Canadian can be overwhelmed when they start to think. I mean, your experience, you know what their rule and the things are, how it goes. But to make it easier, we pull all those resources and a lot of insights, advice, resources into a link. It's rbcbank.com /HPA for Home Plus Advantage, HPA. And in that also, it includes an e-guide that they can learn about the other issues or considerations related to buy or own US real estate by Canadians. They have also access to a network of external legal, tax, and estate experts who are used to the cross-border legal, tax, estate issues for guidance and advice. Homeowner insurance too. And also what is good in that, we put an MLS. There is a link there that we developed here for the US. For Canadians, they can look at any location they want to buy in the US, and then look at the market, look what is on actually currently on the market, see the price point and all that. And then the second thing, Glenn, when they start their process, is the link to their pre-approval. Get pre-approved. And then you set your budget, you get a letter good for 120 days, you know how much you can get as a US financing. So you can look at, after that, your budget and what is available in the market you're looking for. If it's Florida or Arizona or specifically, a location. This link is like a real-time MLS, 15 minutes, maybe delay, that's it. So you see, Glenn, it's all tools, resources we developed for helping Canadians from dream to doorstep.
I love it. There's a lot of information there. But yeah, good tips. I think people know where to go now to find this, and that's awesome. Alan, I really appreciate you coming back on the show. Just like the first time, so much information, so much takeaways from this. I do really appreciate it. I think it'll help a lot of people.
I appreciate the opportunity, Glenn. You know where to find me, and always a pleasure. Thank you.
Thanks.